Most of the time, at least recently, it seemed we could get on this video camera, start recording videos, and talk about our wins for the day. Today, it doesn't look like we have those wins on paper, even though this morning and as the day went on, it seemed like we made all the right decisions. We positioned ourselves into oil. Oil was up big, hitting levels not seen in over 6 years, and having a bullish fundamental story. We had also put on SPY puts to protect against any sort of downside. And today, one of those moves printed and then started to not print as much. And it was like, well, what just happened? Did we just get screwed? Well, I think not. I think we are still in the driver's seat and it doesn't make sense to move here. And we really just got to stick to the fundamentals. If we look at oil, yes, it was down big today, but just a few hours before the day started, it was up very big as well. And that made a whole lot of sense. The market had been anticipating production increases to oil, and OPEC didn't come to an agreement, which means there's no agreement on production increases. So there's no production increases, yet there's continued rising demand as the economy reopens. So the price of oil is expected to continue to go up. In addition, the price of oil has continued to go up, but the energy stocks have been laggards and not really moving positively. So there's probably a lot of room between the current price of energy stocks, which are highly correlated with the price of oil, and where they should be given the price of oil. So I say we just sit with that position and allow the market to rationalize there. And normally it's faster, but right now it's not happening, and we expect that to turn around. We don't expect that to continue. Looks like there's a number of forces happening today. There's fear over OPEC not coming to an agreement, meaning that OPEC is going to dissolve. From what I heard the Saudi minister say, that's not going to happen because all OPEC regions except the UAE are in agreement, and they're not going to disband a group of 20 people, 21 people, because one person is freaking out. They're probably going to cause problems for that one person who decides not to comply. So that means that person is probably going to comply, and they're either going to come to an agreement that is good for the oil market that allows them to continue to print money, or they're not going to come to an agreement, which means they're going to continue to print money. So I'm not getting caught up in the oil sell-off that happened once the market opened. I'm sticking to where the people had it when the news first broke, not where the weak hands moved it, okay? I'm not moving with the weak hands. I'm sticking to the fundamentals. As for the SPY put, yes, we did make a lot of money on that. And yes, it did seem like the market was moving down pretty aggressively. That move can continue. It shows you that the market is ready to have this kind of move. To put things into perspective, the market has never had 10 consecutive up days. If it had gone today, tomorrow, and Thursday, it would have had 10 consecutive up days. So that means a down day, given historical trends, was pretty likely. It so happened that it seemed like we got it today. And I think a couple more is warranted. It really looks to me like Amazon was propping things up. They're not going to have a new CEO's first day every day. They're not going to have Jedi new contract modifications every day. It seems to me like it's an expensive stock. Yes, a lot of people like it. Yes, it does well when interest rates are low. And yes, it's been consolidating for a long time. So maybe it's in for this massive run to the upside. I don't know. And that would be one hell of a counterweight to any short-term position against the S&P 500. So we're not necessarily betting against the market. It's really just a hedge. But I do think the market needs to cool off because, as I said, 10 consecutive up days has never happened. It's a lot of reasons for the market to get choppy here. Delta variant, that is something on the oil market, both a blessing and a curse. A blessing because who wants to invest money in new oil production when there's the risk of suppressed demand given the Delta variant? And at the same time, there's the risk of suppressed demand given the Delta variant. So I just think that's an overall economic variant here as well as a virus variant. And the market hasn't stomached that. It's continued to push to new all-time highs. So I'm a little cautious. Got a decent cash position. Got a, not crazy big, 1 or 2% downside protection position. That could get up to, 3% if you want to get bold with it, depending on the size of your portfolio, depending on how big one single SPY put option is for you. There you go. But you got to be ready to go to zero with that because it is a hedge. We are not bearish on the market. We don't think a crash is coming. We're not, this isn't February and January of last year when we had been saying market's overpriced given the coronavirus risk. There's no major risk. It's just be fearful when others are greedy and be greedy when others are fearful. So that's how we're playing it. Saw those indicators in Palantir and Snapchat last Thursday. And we're sticking with the oil move. So not doing anything crazy. Prices are expensive. There's not a whole lot of attractive buys, and we want to buy when we have an edge. So edge fund over here. We are an edge fund. And like always, not financial advice. Not financial advice, even though it's financial advice, obviously. Everyone just says not financial advice, and the silly laws, which are super outdated, make them not liable. So I'm not liable, but I'm also not charging you a fee. Not charging you a fee for this information, so I can't be liable. Just got foreign clients for now. We'll have the Series 65 soon, so I can take domestic clients. And until next time, peace out.